Homeownership. After an extreme low in 2016, homeownership has been making a gradual recovery. Ownership trends are changing, though. With priorities changing, so do the types of homes people are seeking. Looking to buy your first home? The homecoming process might seem overwhelming, but it doesn't have to be. In the 1986 movie The Money Pit, a couple buys a beautiful mansion in the country close to their work in Manhattan. It's a deal of a lifetime, or so they think. Poor wiring, rotting wood, no hot water, and a collapsing staircase plague the unhappy homeowners. Navigating the obstacle course of buying and building a new house is always challenging. People you need on your team: a local real estate agent, a real estate lawyer, and a home inspector. Don't buy a new home alone unless you're a real estate agent, a lawyer, a home inspector, an architect, and a construction worker. Hire professionals to guide you through the process. Shop around for a home loan. Builders usually have a preferred lender, but that doesn't necessarily mean that you'll get the best possible loan terms from them. You should always shop around for the best deal and the best service. The same goes for closing agents. Know what your options are so you can make a good decision. Research the builder and the community. Some builders have a track record and some do not. Even if the builder is relatively new to the market and isn't yet known for the quality of their work, there are still ways to check them out. Read online reviews, check with state licensing boards, and seek out any local court records to see if there have been any problems or complaints. Size and location over upgrades. Upgrades are tempting and builders often throw them in to sweeten the deal, but consider this: most upgrades can be done at any time. Location, on the other hand, can't be changed. No house is perfect. Of course, we all have ideas about that perfect house, but the fact is, no house is perfect. Once you've lived in a house for a little while, you will notice issues, some big, some small, that make the home imperfect. Get everything in writing. Verbal agreements are non-binding, meaning that the builder could promise you the moon despite the fact that you have no recourse if they don't deliver on that promise. Until everything has been agreed upon and written into the contract, don't sign it. If the home is not completed, the contract should spell out how it will be finished, what will happen if construction isn't completed on time, and all deadlines for decisions. Now, check your credit scores and credit reports. The bank relies heavily on them to determine which type of mortgage you qualify for, or if you qualify at all. There are three major credit reporting agencies: Experian, Equifax, and TransUnion, and you can request your full credit report, including your score, from each of them once per year for free. Make an itemized list of your regular monthly expenses, including credit card payments, student loans, car payments, and other recurring expenses. Add in all expenses related to your new house: monthly payments including mortgage, property taxes, homeowners insurance, and mortgage insurance. Now take your total monthly expenses and divide by your total monthly income. You'll end up with a percentage number that is known as DTI, which stands for debt to income ratio. The bank will look at this number to decide whether you can afford a house. 43% is the magic number to stay under. If you're under 36%, you should receive much better terms and interest rates. Find a realtor or real estate agent you can trust. An agent can provide valuable information on market conditions, pull up comparable sales to help you see whether a house is worth the asking price and whether it's been sitting unsold for a while, help you prepare your offer and counteroffers, and work through any sticking points that might develop. What a sentence. Gather the documentation you'll need. Among the documents you'll likely be asked to supply are the last 2 years' worth of your tax returns, pay stubs or other documentation of income for the last 2 months, all bank statements, brokerage and investment account statements for the last 2 years, proof of funds for down payment and closing, and ID, preferably a driver's license or a passport. Make an offer and negotiate. Your realtor will once again be your best friend and can walk you through how to make an offer on a house. He or she will know the market and can advise you on the right amount to offer. She or he may even be able to find out how hot interest has been in the property and whether there are other offers pending or in the works. No purchase should be completed without having a house inspection performed, and no contract should be signed without a contingency clause saying the house must pass inspection. This will assure you that there are no hidden structural or functional problems with the house, and will give you ammunition for any contingencies which must be written into the contract. Not all real estate transactions require an attorney. In some states, you're required to have a lawyer represent you, but it's optional in most. Your realtor can tell you whether it's a necessity in your area.